Good morning and good evening. Thank you for standing by. Welcome to the CTW earnings conference call for the first half of fiscal 2026, representing the 6 months ended January 31st, 2026. Please note that today's conference may be recorded. My name is Matt Chesler from FNK IR. Hosting today's call is Ryuichi Sasaki, CTW's founder, CEO, and chairman, and Patrick Liu, CTW's CFO. Before we begin, please be aware that today's discussion may include forward-looking statements as defined under the Private Securities Litigation Reform Act of 1995 and other federal securities laws. These statements reflect management's current expectations and involve risks and uncertainties that could cause actual results to differ materially. CTW undertakes no obligation to update these statements except as required by law. For a detailed discussion of risks and uncertainties, please refer to our Form 20-F and other filings with the SEC. We will also discuss certain non-GAAP financial measures. These measures should not be viewed as a substitute for GAAP results and may differ from those used by other companies. Reconciliations to the most comparable GAAP measures can be found in our Form 6K, our earnings release, and on the investor section of our website. With that, I'd now like to turn the call over to Ryuichi for a video and prepared remarks.
皆様おはようございます。そしてこんばんは。本日はご参加いただき誠にありがとうございます。本日の決算説明会は上場後初めての決算説明会となります。上場企業として規律ある事業運営と高い透明性を重視しながらグローバル展開を通じて中長期的な企業価値向上に取り込んでまいります。まず、業績概要についてご説明いたします。2016年度上期において、当社は7本の新作ゲームをリリースし、期末時点での運営タイトル数は35本となります。この継続的なグローバル展開は、アニメ IP コンテンツの幅広い人気とプラザベースモデルの高いアクセス性を反映しているものと考えております。財務面では、ゲーム内総課金額は4860万ドル、売上高は4090万ドルとなります。いずれも前年同期比で約 1% の減少となりました。主な要因としては、新規リリースタイトルの立ち上げが想定を下回ったこと、既存タイトルの成熟化、結果として業績は当初想定を下回る内容となりました。一方で売上が想定を下回る中でも当社では広告投資や運営コストの見直しを迅速に行い、機動的な運営を徹底いたしました。社内ではユーザー動向、収益性、マーケティング効率などを継続的に分析しており、それらを踏まえて広告投資やコスト分配を柔軟に調整しております。その結果、販売、マーケティング費用は前年同期比 15% 減少し、広告費については 24% 削減しております。当社では単純な売上成長ではなく、投資対効果を重視した運営を行っておりました。想定した結果が見込めない場合には素早く施策を見直しを行っております。売上減少に加え、新規タイトルへの投資、上場企業としての運営コスト増加、さらに為替影響などにより、営業損失は170万ドル、純損失は120万ドルとなりました。当社としてはこの結果を重く受け止めておりますが、一方でコントロールを進めていくことで損失幅について一定程度抑制できたと考えております。期末時点での現金残高は1950万ドルとなっており、IPO による調達資金を背景に引き続き安定した財務基盤を維持しております。営業キャッシュフローは40万ドルのマイナスとなりましたが、これは短期的な業績要因に加え、インフラおよび組織体制強化へ継続投資によるものです。当社としては 今後の成長に向けて先行投資の局面であると考えております。下期に入ってからは、学園目次録および掛け狂いを含む4本の新作タイトルをリリースしております。まだ初期段階でありますが、初動の数値については、上期タイトルと比較して改善傾向が見られております。さらに、薬屋の独り言や借眼のシャナーなど追加タイトルも控えております。地域展開についても、上期売上の約 70% が日本市場になりますが、特に北米市場を中心に海外市場には大きな成長余地があると考えております。この取り込みの一環としては、1月にはニューヨークに拠点を設立し、現在マーケティング、パートナーシップ、ユーザー獲得に担う現地チームの構築を進んでおります。当社のブラウザベースのモデルはインストール不要で、即時アクセス可能で、マルチデバイスにも対応しております。ユーザー獲得コストが上場する市場環境の中で、当社の強みの一つと考えております。今後も人材やインフラへの投資を継続しながら、財務規律を重視した運営を進めてまいります。当社の優先事項は明確です。コンテンツパイプラインの品質と安定性の強化、海外市場の拡大、技術システムへの継続投資、長期リターンを重視した事業運営、これらに継続して取り込んでまいります。従業員の皆様には日頃の尽力に心より感謝を申し上げます。また株主の皆様には上場企業として最初の1年を歩む当社へのご支援に深く感謝を申し上げます。なお、CTW ケイマンから CTW への社名変更につきましても、グローバルブランド及びナスダック定価との統一性をより明確にすることを目的としております。当社はまだ成長途上にありますが、強化を進めているコンテンツパイプライン、拡大する海外展開、そしてデータ分析を軸とした運営体制を基盤として、今後の中長期的な成長に自信を持っております。本日はお時間をいただき、誠にありがとうございました。それでは CFO のパイチュクリュウに引き続きます。
Thank you, Raj, and good morning, everyone. As Raj discussed, the first half of fiscal year 2026 was a softer period than we expected from a content performance standpoint. Financially, our priorities were clear: respond quickly to underperforming game launches, allocate capital with discipline, protect monetization efficiency, and preserve balance sheet flexibility as we continue investing for long-term growth. Revenue for the first half was $40.9 million compared with $41.2 million in the prior year period, a decrease of 0.7%. Gross in-game purchases were $48.6 million, down 1.1% year-over-year. These year-over-year changes were relatively modest on the surface, yet they reflect an important shift in the underlying drivers of performance during the half. We launched 7 new games during the period, but as Raj noted, those launches performed below our expectations. And at the same time, several mature titles continued moving through later stages of their life cycle, and overall user activity declined. That said, one of the more important takeaways from the first half is that even in this softer revenue environment, the quality of monetization across the platform remained resilient. Monthly active users declined to approximately 2.0 million from approximately 3.3 million last year. However, paying monthly active users remained stable at approximately 75.7 thousand compared with approximately 76.7 thousand last year. As a result, the conversion rate improved to 3.82% from 2.35%. In addition, we also saw improvements across key monetization and efficiency metrics. ARPPDAU increased to $18.19 from $16.31. ARPMAU increased to $4 from $2.50, and RAS improved to 109% from 106%. In practical terms, traffic declined primarily among non-paying users, while the platform continued to attract and retain a higher quality paying audience and generate more efficient returns on advertising spend. We also continued to make gradual progress on geographic diversification. Revenue from users outside Japan increased to 31.6% of total revenue, up from 28.8% last year. Japan remains our largest market, but expanding our international mix remains a key strategic priority. Turning to expenses and profitability, cost of revenue increased 39.6% year over year to $13.9 million. General and administrative expenses increased 13.6% to $5.1 million, and research and development expenses increased 25.3% to $1.7 million, reflecting ongoing investment in platform capabilities and organizational infrastructure and additional costs associated with operating as a public company. At the same time, sales and marketing expenses declined 15.2% to $22 million, driven primarily by a $5.9 million reduction in advertising spend. This reduction was intentional, reflecting the disciplined response Ryoichi described earlier. When new titles did not meet our internal performance thresholds, we quickly scaled back, making marketing rather than pursuing top-line growth at unattractive returns. This responsiveness is a core strength of our operating model. As a result, we reported an operating loss of $1.7 million compared with a $500,000 loss in the first half of 2025. Net loss was $1.2 million compared with a net income of $0.6 million last year. While we are not satisfied with reporting a loss, it is important to view that result in the context of a period in which revenue underperformed expectations, combined with continued investment in infrastructure and long-term capabilities, while maintaining meaningful cost flexibility. There are also two period-specific items worth noting. First, we recorded approximately $1.9 million of share-based compensation expense related to stock options granted in December 2025. Second, following early adoption of ASU 2025-06, we capitalized approximately $2.1 million of qualifying internal use software and cloud implementation costs. Both items are relevant to understanding the period-over-period financial profile and the level of ongoing investment in the business. On a non-GAAP basis, performance remained solid. Adjusted EBITDA increased to $4.3 million from $3.7 million, representing a 10.5% margin, and segment profit increased to $18 million from $11.6 million. These metrics highlight that the core economics of the platform remain healthy and responsive to disciplined cost management, despite softer revenue and a GAAP net loss. Turning to cash flow and the balance sheet. Net cash used in operating activities was $0.4 million compared with $2.6 million of cash generated in the prior year. This change was driven primarily by working capital movements, including additional advances made to game developers and higher prepaid royalties as we invest in future content and platform support. We ended the period with $19.5 million in cash and cash equivalents, up from $12.2 million at July 31st, 2025, supported by the proceeds from our IPO. We believe this positions us well to invest selectively in content, systems, and international growth while maintaining strong liquidity and financial discipline. Overall, the first half of fiscal year 2026 was a period of softer top-line performance, but also one that demonstrated the responsiveness of our operating model and the robustness of our financial monitoring systems. We acted quickly when new title performance did not meet expectations. We improved key monetization and efficiency metrics. We maintained positive adjusted EBITDA, and we ended the half with a solid cash position and the flexibility to continue investing for the long term. Thank you, and I will now turn the call back to the operator for the Q&A sessions.
Thank you, Patrick. We're now going to open up the call to question and answers. From Zoom, there are two ways that you can participate. The first is to use the raise your hand icon, which is at the bottom of the screen. Clicking this alert will alert us that you want to be called on to ask a live question, and then you'll be placed in queue and called upon in turn. Just note you're going to be on mute until you are called upon. The second way to participate in Q&A is to use the Q&A widget, which will allow you to type in and text the question. We'll take questions from there as well, but just note if we run into a time constraint, we'll get back to you if your question is not asked on today's call. With that, we'll now pause for a moment to build the queue. The first question is going to be from Steve Silver from Argus Research. Steve, go ahead.
Everybody, thanks for taking the questions. I was hoping you guys could just discuss a little bit about how the company's using technology to build in the capabilities of reacting quickly to changing user behavior. Just trying to get a sense as to any of the metrics you look at and how much time you give to a new title before making the determination that a title is underperforming and requires a change in the marketing strategy.
Okay, thank you. Thank you very much for the question, Steve. So in regards of your question, I think you asked about how our technology works and how we actually monitor new game launches and how we react in regards to the early performance indicators of a new game after it was initially launched, right? So basically, I think we have been communicated with the market before. The company, we have internally developed a set of AI-backed systems and tools to help us monitor the performance of each new launch games, or as well as every live games that is on our G1 platform. And one of the very important system that we are using internally is the AI-backed advertisement management system, and also the user data monitoring tool that we are able to see the real-time performance of each individual game that is actually live on G1 platform. So, for example, for each of the new games that launched on our platform, we basically most of the time we do a relatively soft launch, means we may spend small amounts of advertisement in day 0 to day 3 immediately after the game is launched. And during that period of time, we can continually monitor the performance, including paying user retention, paying user conversion rates, and all those key KPIs that we believe indicates the potential of any new game launched on the platform. And based on the results of those games basically between day 0 to day 3, the marketing team of the company going to decide is this really a hit title, or this is somehow not as performed not as expected. And based on that result, we will further adjust advertisement spending as well as strategies for day 4 and 7. And we're going to continue monitor the performance of that game through that period of time. And eventually, we're going to roll into day 7 to day 14, and then continue adjusting the advertisements proactively. I would say that is how internally we use our AI-backed tools to monitor game performance and adjust our advertisement marketing cost allocation and spending.
Great, thanks. So in the context of the trend in terms of active users, do you get a sense as to whether a lot of that has been attributable to the customer excitement over some of these new underperforming launches, or do you get a sense of whether there's any macroeconomic trends affecting those results as well?
So regarding of these new titles that we launched for the first half of the fiscal year 2026, I don't think it's as simple as say, oh, it's a bad IP or it's a single game format problem. I think broadly speaking, we believe the first half underperformance was primarily related to monetization quality and unit economics rather than traffic acquisition or initial user interest. I think several of the new titles generated reasonable engagement and user acquisition metrics initially, but the payer conversion, monetization depths, and the long-term return on advertising spends profile were below our internal expectations. I think in some cases, we believe certain titles attracted broader casual audiences with lower monetization behavior relative to several of our stronger performing historical launches. As a result, while top of funnel traffic and engagement were acceptable, the long-term monetization efficiency did not justify aggressively scaling advertising investments. And also, we think that it is actually very important to recognize gaming performance can vary significantly by timing, audience fit, monetization design, live operations execution, and broader market conditions, even when underlying IP awareness is strong. I think basically that is the observation we have been seeing from the first half of the current fiscal year.
Great. And one more, if I may. The prepared remarks or the press release cited 20 titles in the backlog.
Mhm.
Curious as to whether there's any context around the number within that 20 in terms of maybe titles that might move into pre-registration in the back half of the fiscal year.
Yeah, so basically regarding of the future releases, the pipeline we have, so far you will be able to see on our website we have I believe 6 games that is actually five or six games that is actually in pre-registration, and for the remaining of those titles, we are still working very actively with the upholders, with the game developers to assure that the game is actually under development and also is actually or we are making the progresses in the correct way. But because the fact that for any of those games that we haven't really released the pre-registration for the games, we are because of the contract we have with the builders, we are still not able to explicitly disclose the specific name or IP related to those games. But we would say that a lot of those games are associated with very popular anime IPs, and some of them are very also like recently popular in North American region. So we do have a lot of expectations when those games are ready to be released to the public.
Great. Thank you for taking my questions.
Thank you, Steve.
Our next question is from Vincent Fernando from Zero One Research. Vincent, please go ahead with your question.
Hi. So I see that your segment margin expanded from 23.7 to about 37%, despite flat in-game purchases. So that shows there's some operating leverage in the platform. I'm just wondering, can you walk us through maybe how the dynamics behind that? Like, is it that you're able to detect where certain products and in-game purchases are doing well, and you divert resources into that? Just want to understand the dynamics. Like, how are you able to increase the percent of the margin from the in-game purchases? Thank you.
Okay, got it. So in regard of the margin of the in-game purchases versus the revenue, so the main factor of that is actually reflecting the new combination or mix of all the games that is actually on our platform. So historically, I believe you probably see that we have been disclosed that well, there's a significant portion of our revenue is actually generated by the game, which is called Vivid Army. And for that game, we historically has a slightly higher revenue share percentage with the game developer of that game. And because the fact that along the way of along the fiscal half year of the fiscal year 2026, we actually launched historically we have been continually launching new games, and the product mix, the game mix is actually changed this slightly. So right now, the Weeb Army is actually not I mean, it's still the largest game by itself, but the game developer of that game is actually not the largest game developers that generates revenue for us. So for the newer games, we tend to give a slightly lower revenue share to the game developers. And because of the change of the revenue proportion generated by higher revenue share games, the overall average revenue share percentage is actually declined year over year, and that explains why you see, yes, even though the top line softer, but from in-game purchases to revenue, we actually see a slightly improved margin.
Great, thank you. Another question, I see that, your ROAS was 109%, and obviously you've optimized your marketing title by title. This kind of maybe goes back to the question the previous answer a bit, but I just want to understand, like, how do what's is that kind of the level that's like kind of a target, and then your engine is kind of optimizing to make sure you maintain that level, and how quickly does it respond to that? And just want to understand how the engine operates relative to ROAS.
Yeah, so basically in regards of the ROAS, so internally we do try to set up a target for each individual game. Overall, I think if we just do a quick calculation of the average ROAS target we set for all the games, I think we do expect to see return on advertisement spending over 100% from the platform in total overall. And to monitor that, I think I kind of explained that earlier when Steve asked about how we monitor new game launches. So basically, it's a step-by-step procedures, and we do early when we launch a new game, we monitor the first is basically from day 0 to day 3 to see the early performance indicators, and based on those, we adjust our advertisement spending basically proactively, and then continue to monitor the return on ROAS plus other key KPIs that indicate the performance of the game, and adjust the advertisement spending allocation accordingly. I think that is the way how we maintain relatively high ROAS compared to industry average.
Got it. So the other thing I want to go into is basically, despite your top line being a little softer, you've had paying monthly active users, sustained. So how does the engine look at paying monthly users? Is it that do you market to them when you see that they're paying, so that you like redirect spend to the people who are paying? Do you have loyalty programs, things like that? I just want to understand the dynamic, how the engine maintains the paying active users.
So in regard of the paying monthly active users, I would say the main efforts where we put as the company to maintain their activity within the games and within our platform is actually not through a lot of the online advertisements. Because for those paying monthly active users, a lot of time they have already spent a significant amount of times as well as money in the game on our platform, so they kind of like know us already a while before. And to maintain the activity level for those paying monthly active users, we tend to work a lot with the game developers and ask them to continually update the game content. So every single time when the user come back to the game, they are seeing something new, and they still, basically keep the interest up, right? And in regards to the online advertisements, a lot of times the online advertisements is mainly to attract the new users and the new paying users. So that is also explains a little bit about while we do see advertisement expense go down a lot because we're actively monitoring how we should spend the advertisement money. The paying monthly active user doesn't really change much, but you see MAU is down a lot, and that is actually a factor of a lot of those new users or non-active users that are attracted by those online advertisements.
Okay, just one more question, if I may. So revenue outside Japan rose from 29% to 32%. You said you've opened the New York office. I guess with anime culture being increasingly a global trend, even a huge thing in the US, how do you view how large the international opportunity is for CTW over the next 2 to 3 years? I mean, I guess if we think about where are you targeting, let's say in like 2 to 3 years, where can international revenue go, as percent of total?
Yeah, so basically, I think one of the company's strategy regarding marketing is I think we have been continually saying this, is that we are aggressively expanding into the North American region, US markets in particularly. And the rationale behind of that decision is that we realize that there's a lot of market potentials, as you just mentioned. So in regarding to our expectation for the next 2 or 3 years, like how we see revenue generated from outside of Japan versus Japan, we do. I mean, we do believe that as long as we are able to efficiently do the localization and find new partners in the new regions and adapt our model to the new regions, we should be able to eventually get around, say, 50% to 60% of our revenue generated from regions outside Japan. But that also depends on a lot of external factors, marketing trends, and everything.
Great, thank you. So I'll leave the queue for other questions.
Thank you, Vincent.
At this time, there are no more questions in the queue, so I am going to turn the call back to Patrick for some concluding remarks.
Okay. All right. Thank you, everyone, for joining today's earnings release for the first half of fiscal year 2026 of CTW. And so we are looking forward to keeping everybody informed as we progress. Again, thank you, everybody.
Thank you, everyone, for joining us today. You may now disconnect your lines.